Thanks, everyone. It's late in the day, and I'm glad you all stayed around for the best presentation they're going to have. I got a kick out of the title that Manav had put on, Why Owners Don't Get What They Want, which, having worked on the operator side and now the owner side, I could debate. And I think when we just chatted, it was, is that the right title, or is it what owners should expect? And are their expectations wrong? So I'll turn it over to panelists. What do you think? Christian, you tell me what you think.
Yeah, so I agree. I think that owners don't sign with us if they don't get what they want. And I think that in today's world, there's so many operators in Asia Pacific and so many brands to choose from that ultimately an owner should be able to find the right match. It's all about relationships.
I guess also with the right level of preparation, owners can get what they want. It's just a matter of getting their priorities and their expectations aligned.
I believe there is always a slight mismatch between the expectations and what is delivered. From the owner's perspective, obviously for them, bottom line is the most important thing. And from the operator's perspective, it's always the brand standards and where they would like the property to be pitched. So invariably, there is a certain amount of mismatch between what you get and what you expect. But eventually, there is a balance, and which is where this harmony exists in most of the hotels, at least that we operate.
I have a pretty unique, I hope unique perspective on this because I am an owner as well as an operator. So sometimes I wear the owner's hat and sometimes I wear the operator's hat. And so sometimes I negotiate with myself on the contract. But I think when you work with an informed owner, it's a lot easier. When you work with an owner who actually have a better understanding of financial, of return of investment, it's a lot easier. And however, where in the field where I play, and I'm definitely not the Hilton or the Hyatt of the world. We're operating independent luxury boutique hotels. So we have to walk the owner along the way to make sure that they understand which point makes sense to negotiate on and which point doesn't make any difference. And along the way, some owners should really have a good consultant along the side. To be honest, a good consultant that goes with the owner when they do negotiation helps. I find that helps the process a lot.
You just hit something very close to my heart, because that's what I do now.
I get
but
percentage.
Thank you. I owe you. One thing we see now, especially on the consulting side, not to take away from their time, is why do owners or investors go into a hotel? Is it for ego? It still happens in Asia. Is it for family business reasons to hand an asset over to the second generation? Or is it a pure investment play? And depending on those, the goals and aspirations are a lot different. And I think you were exactly right. If the operator is aligned with understanding the owner's goals, the negotiation's a lot easier, and then the relationship's a lot easier. One thing I was thinking next, following on that, so you go into a negotiation, we'll start with you, because you negotiate with yourself, right? If you could name 3 things that you would say are key to an owner and 3 are key to an operator, what would the top 3 be for each?
A lot of time, again, I'm speaking from a boutique hotel operator and not a large corporate Hilton Hyatt, but a lot of time, the key thing for an owner is personal relationship, trust, and almost is they want to make sure that I'm there. It's the one person that they can talk to. The second thing is guarantee. A lot of time, if they're not well informed, they don't always ask for that. But there's that bit. And a lot of time they ask for exclusivity in the area, which sometimes we can give and sometimes we cannot, but it's a long negotiation for that exclusivity. A lot of time when I deal with the boutique hotel owners, it's pride and joy, and it's a trophy property.
Yeah.
Yeah. So they get
Maybe-
really involved.
Okay, maybe that's top of mind, all right, before we lose it. You guys want to comment on?
No, I think
The
the
thoughts?
first point Anchalika made is very relevant. You know, it's the relationship which really is the starting point. If you're not comfortable with the key decision maker from the operator side, eventually the relationship becomes toxic and can create problems. You know, when people start to look contracts, look into this is what you need to deliver, and the owner expects something else. At the general manager's level, it becomes pretty difficult to handle. So you need to always raise the level. You're talking to maybe the country heads or the regional heads, and if you have a good relationship with them and they have a good relationship to understand what the expectations are from the owner's perspective, usually you find solution. I mean, and it's probably the key thing that the relationship between the owner and operator needs to be balanced and harmonious. So that's number one. The second is obviously from the owner's perspective, they want their property to be obviously everyone's expectation is to be the best in its class. Everyone expects his EVs to be a Sofitel or it's a matter of perception. But in terms of having your property and its benchmark against his comp set at a level with maybe an RGI of 1 or 1.1 is a reasonable expectation. But the problem happens only when the owner expects a much higher return on his investment, and operator typically feels the other way around. So for us, the performance is equally important as with the relationship. And the third thing is termination. If for any reason things don't work it out, and if there's a dispute, then there should be a fairly straightforward, clean, easy way to terminate the agreements and move on with their respective lives.
Yeah. I'd like to come back to your point on, you mentioned guarantees. I assume you meant financial guarantees.
Yeah, a lot of time.
I think I would definitely agree with the comment on relationship. The one thing that is a little bit different with Hilton, because we have multiple brands, is that one of the first issues is which brand. And getting that right actually then ties in with what Sanjay was speaking about, with expectation of performance and whether or not the operator will be able to meet that expectation. And that's one issue that is equally important to both owner and operator at the beginning. Which brand should we use for this project?
Yes.
I think the other ones, they're, I guess, perhaps obvious, but especially with a lot of first-time owners, it's all about fees. And in this part of the world, sometimes less about the term, the length of the agreement, even though those two are actually intricately connected. And again, coming back with the right advice and a third party that helps an owner determine, well, what is their goal, what is their strategy for this asset over 10 years, over 20 years. Is there a possibility that they might dispose of the asset, or are they going to keep it for the next generation? All this is very important at the beginning.
Yep. Stephane?
Well, maybe to add to everything that's been said, is also an effort from both parties to better understand the other party. So, like, the operator should maybe get into understanding the financing of the project, and maybe adjust the management agreement accordingly. In the same way, what Christian said, maybe the owner needs to understand if the brand is right. But just on that brand issue, I think the expectations are very different when you negotiate a luxury brand like Waldorf Astoria versus, say, yesterday we had Red Planet. These dynamics would be very different, right? But at this point in time is, again, we need to get into the assumption that preparation is required on both sides, and most of the time, the operators really should try to wear the owner's hat when getting into the meeting. Now, the owner, the main recommendation is, as you said, it's getting the right advice, or some owners are a bit more educated, but there might be different options. But on the operator side, it's generally really getting a better understanding of the structure of the deal, the personality of the operator. I mean, you mentioned about relationship, trust, etc. But these are taken for granted, which may not always be the case.
Yeah, I agree. So come back to the top three. You see?
I said brand, fees, term.
That's for you and for the owners?
For us, I think the termination, performance clause, and the term.
I think that's my top three. Yeah.
Term meaning duration?
length.
Duration of the agreement. You don't
Right.
want too long a term. You don't want too short. So ideally, about 10 years is good enough.
One thing I'm seeing more and more is an owner insisting on termination on sale. If not termination for any reason, which I don't think many operators would give. I wouldn't recommend any operator give it, but termination on sale certainly seems to be insisted on because it comes down to valuation. Do you see that much, guys?
Yeah, I mean, it's a fact of life now. More and more investment is coming through the private equity world. People want flexibility, and you don't want to be saddled with something which a buyer is looking at either changing the brand or putting their own flag. So there is a financial composition. Completely understand and agree that if you are asking for a vacant position after, let's say, 3 years or 5 years of the term, then there needs to be very clearly defined compensation formula within the HMA to ensure that the operator is compensated for creating the value for the owner. Completely get that. But there has to be a flexibility, otherwise you'll never be able to extract your value.
Termination after 3 years?
I mean, it happens. There are I won't name the names, but I know someone who insists on having this particular clause, and is a pretty successful investor. We all know who we are talking about.
3 years, huh?
Yeah.
That hurts.
Yeah,
you
we
know,
couldn't
if you
work with
sign-
him.
Yeah.
Yeah, I was going to say.
No, I think, but again, there we understand very well, and the particular investor that you're referring to, is a very unemotional discussion. And I think we're all still friends, but it really had to do. He has very clear investment, a very clear investment strategy, and for us, it's really about our brand and how long is that flag going to be up? Because from a consumer point of view, from the market's point of view, from our guests' point of view, if our flag goes down after 3 years, they don't know that it was because of a sale, and there was the sale on vacant possession, and this was something that was negotiated, and we were compensated. No one knows that. They just see, oh, Hilton was here, Hilton is gone, they must not have done well. And so, for us, it's all about, brand reputation and upholding that.
Yeah, I think in this day and age, Chris, that the media, the digital media sort of plays a very important role, and I think people know for fact that if for any reason a particular property has been deflagged, it may not be due to the operator's performance, but maybe for other strategic reasons. By and large, I think that the message is properly propagated out. But I understand, this could be a danger, especially for the first-time owners or people who really don't have much of industry knowledge.
I think there's also another thing, it's also very market-specific. In certain markets, valuations will get a bit a bit of a premium if there's a vacant possession. Other markets, valuations will get a premium for not.
Yeah, absolutely.
And there's also not a real consensus amongst valuers or buyers and sellers, and it really varies from market to market.
Yeah. I mean, I remember in my days when I was doing the development at Starwood, and an owner would ask for vacant possession on sale, and we would negotiate against him by saying that our brand is so valuable that you're going to get more with the brand on it than you would with VP. Now, did I believe that? Not sure. Not sure. With W, maybe. Maybe with W, I could make that case validly. But certainly now on the side where I sit, you talk to any valuation company, and an asset is worth more with VP than it is with a brand, just because the new buyer has a choice of what he wants to do.
And sometimes it's not an owner who's buying this asset. It could be an operator that has his own brand coming
That's
through
true.
into a
Yeah.
destination that needs to have his own brand.
Yeah.
So, I would agree with you. Like, with my operator hat on, I wouldn't agree to it.
Yeah.
With my owner's hat on, a certain way out, like Sanjay suggests, makes a lot of sense.
Right. Well, what Chris didn't address this yet, maybe we can ask you to address it, because I have seen your contracts. Something very dear to the operator's heart in their agreements are transfer provisions. Who can you sell to?
So this is an interesting one because this is an issue that comes up in almost every negotiation, and the question is really, so why, if I'm an owner, why do I have to ask the operator for permission to do a transfer, even if it's to a subsidiary or so on? And the answer is, we're not here to block that, and it's not that we want to have a say, but we have certain compliance requirements that we have to meet in terms of anti-bribery, anti-corruption laws that we follow by being a listed company on the New York Stock Exchange. And so that's the reason why we have to have these sort of, we'll call them approval rights over transfers. And I think that one of the questions you're saying, what are the key non-negotiables, and compliance related matters are certainly one of the top 3 non-negotiables.
Yeah. What I always like to say is when it comes to transfers, I think it was a rule of 3, if I remember. You cannot sell the asset to a criminal. You cannot sell to a competitor. I can't remember the third. What would be your third? Those are the top 2.
I think allegations of corruption and bribery in this part of the world
Right.
is very close.
So you don't sell to Najib? Is that?
I can't comment on that.
Sorry, guys. Any other thoughts on top issues for operators, owners?
Maybe the increasing willingness of owners to get a bit more involved when appointing GMs as co-members and control on cash. So
Yep.
there's some amendments to be made to existing agreements on that front.
Yeah. I guess that's where when you look at Asia, one thing you don't see too much right now, when you come down to why does an owner go into business, right? If it's about control, then a hotel management agreement is often foreign to him, because an owner has to give up control of the bank accounts, control of human resources, etc. And that's just the nature of the beast. Right now in this part of the world, franchising is not incredibly common, maybe except countries like maybe Japan, Taiwan, and Korea. I think franchising is more common. What do you guys see as the future or possibilities for franchising in Asia?
I think there is I mean, we work in all the three models. So in Thailand, we have management contracts with the operators. In UK, we are the largest franchisee for Mercure. So we have fairly extensive operations there. And in Germany, we have a lease model, so we've given our assets on a lease. Obviously, the returns are in inverse proportion. So the least you get is on the lease, and then on the hotel management agreements, and then, of course, the maximum that you make is on the franchise model. So I suspect in this part of the world, especially in Thailand, it may come, but there's always a catch. The operators here have now such hugely extensive operations in play that it may be the cost effectiveness may not sort of come into play when you are converting your HMA into a franchise agreement, unless you have the scale and you have maybe dozens of property. Then you set up your own management team to ensure that you get the best out of the franchise model. I'm pretty lukewarm that it may not work out in Thailand. I mean, I'm happy to hear the other views, but my personal view is that it's still far away in Thailand.
The issue is pricing, as I know that Hilton is...
No, I mean, I think some of the asset managers know better where the spreads are between franchise and management fees. But I think in this part of the world, management fees are perhaps lower than in other parts of the world. But I think
I don't want to ask you what you get in
the
total.
the point comes to what Sanjay said was, I think we don't get a lot of inquiries for franchise, and most of the owners that approach us for management contracts don't have any management platforms in place. And then comes the question, we're not opposed to it. We're open to discuss that, but I think they sit down, they think, okay, what is it going to cost me to put a management team in place in-house, and then that versus the potential saving over a management contract, and does it make sense? So I think that's sort of what we're dealing with now. We had colleagues of ours from the US and from Europe come over who work in the franchise estate. And the point that they were making was, franchise is pretty much, I don't know, almost all the contracts in the US right now are franchise agreements. Yeah. In Europe now, it's maybe about half of what's happening. But our European colleagues said, 10 years ago, it wasn't half. It was pretty much all management agreements. So their view is that it's coming to this part of the world, whether it's going to strike first in Thailand or other places, that's to be seen. But I think, we're certainly, gearing up for it.
Yeah, you're right. Interestingly, I think about 10, 12 years back, when the private equity money moved into Europe, they consolidated, bought huge amount of portfolios, and brought in, typically these are American hedge funds, so they bring in the interstates and the Vellores of the world to come and manage these assets. And when they change the hotel management agreement into a franchise model, they could unlock the value very, very quickly. I've seen at least 2 cases in UK where we were bidding for the portfolio. One portfolio which was picked up by Goldman Sachs, they bought in for close to about 70 or 75 million pounds, and they flipped the same portfolio for close to 110 million in a span of 12 months. And that was largely on account of rationalizing the cost structure, removing the management agreements, and then changing it to franchise model. And this part of the world, really it's all about owners who are not institutionals. So, with the exception of a few like, Minor and Central, Markland is also, but they typically put their own brand. So.
Yeah, I was going to say, and I think Stephane, before the meeting, spoke about this a bit. If you look in the United States, where franchising, you're right, Chris, It's by and large, that's the way hotels grow. The hotel operators, they flip. They flip from one brand to another, but the owners have their operational expertise and their own infrastructure. And I think the difference, to bring that out here, you guys tell me what you think, is that so many are not institutional investors, if you will, that it'll be difficult for an operator to go to a franchise if they don't have trust in that owner being able to operate and maintain the brand standards. Chris, what would you say?
I would absolutely agree. I mean, it's really, you know, what is the experience and the management knowledge and know-how that an owner has in place, which will, you know, determine whether or not, you know, he can become a franchisee of ours. In the U.S., there's still, you know, a third component where there are management companies. So an owner will sign a franchise agreement, and then he'll still bring in a third party to manage his property.
Like an interstate.
Like an interstate. Mm-hmm. And I think, you know, that's again something that works over there, because I think, you know, the spread between franchise and management fees allows for that. Mm-hmm. Whereas I would question if that's going to be possible here.
Yeah, I mean, I agree. That's it's correct assessment.
Well, we had talked about what's non-negotiable. I think we touched on that. In the interest of time, so everyone can get home early, first of all, does anyone have any questions from outside? We can hear you.
We can hear you.
Okay. Looking at the heightened levels of competition across brands, what I'd like to understand is what do you see as the emerging trends on fee structures towards owning companies? Is it going to be the standard base incentive, marketing contribution and license fee, or are you seeing more reliance towards performance-linked fee structures?
We'd definitely like to move. I mean, the HMAs are already signed, so, you know, it's difficult to renegotiate them. But for the future development projects, as I mentioned earlier on, performance is becoming hugely important for the owning companies. So anything which we're in, there's a small base, but with a high incentive, reaching on certain threshold is going to be an interesting proposition for both sides. Give you an example. Let's say, you know, we have an agreed pro forma for 5 years or 10 years, and you give them a couple of years to ramp up, and after that, for every year, if they don't reach the pro forma numbers, then they don't get anything on the incentive. But if they are able to outperform the pro forma, then they get a huge slice on the uplift. So, for example, if you're expecting an EBITDA of 100 million baht as per your pro forma, and you actually get about 130 million, then of the 30 million, we're happy to share maybe 20-25% with the operator, and that way, you know, the operator is bound to make much more than a traditional model. So it's aligned, and that's something which I suspect will come in play.
So you're seeing operators that agree to guarantees, if you will, based on the development pro forma?
Not yet, but not in Thailand as yet, but in UK, yes.
Wow.
And like I said, I suspect that this model will come into play sooner or later.
Just following up on that, I think different markets command different term sheets. You talked about performance guarantee. I'm pretty sure that in certain markets like, you know, Tokyo, I mean, generally Japan is leases, but let's say Hong Kong, Singapore, you will get performance guarantees. In less mature markets, you won't get even a performance test. I think Thailand is in between. I think generally performance tests are an acceptable clause. But again, they need to be properly negotiated. So the thing is, getting a performance test is one thing, how it's being structured and negotiated is another. And that's where often, most of the time, as I said, it's a level of preparation that needs to be done on both sides to agree on reasonable numbers.
Sorry, one correction. We actually did sign the first one on this model for a smaller property in Thailand. So we'll see how it works out.
Performance guarantee?
Yeah, performance guarantee within a huge uplift if they are able to meet the minimum threshold amount.
Traditionally, hotel contracts are based on performance anyway. It's a percentage off. So whether you enhance that or not, it's performance related.
Yeah, but in many ways it almost becomes like a VAT, you know, even if you are even if you are having a very low GOP, you still get an incentive, and the owners are not incentivized, you know. Owners are not getting the adequate return on what typically operator provides at the beginning of the development project. So there needs to be some kind of an alignment, you know.
Chris is quiet here.
I think the point that Stephane made is accurate. I mean, different markets will behave differently, and in different markets, you know, operators will be more open to certain, you know, terms where in other markets they wouldn't, and more mature markets will obviously, you know, allow for more flexibility for these types of sort of fee structures. Thailand, you know, still has a way to go. It's still growing tremendously. It's a dynamic market, but you know, there's also some volatility, so it's very difficult to predict the future. You know, we should know our costs, but you know, guessing revenues, you know, I ask the fortune teller and he gets it wrong sometimes too.
Yeah. And the thing maybe on that one, Tom, is that when trying to convince the owner, for example, that a performance guarantee cannot be done in certain markets, you just tie it up to very basic fundamentals. If supply is not controlled by some sort of governmental regulation, you cannot, because, you know, the hotel management company already has a hard time dealing with, you know, demand and trying to capture as much of that demand as possible. They don't want to get to deal with supply, right? So if there's nobody out there helping with the supply control, which in most cases is, you know, city planning or government regulation, which you typically get, and definitely in Singapore, then yeah, you're more comfortable trying to come in and, you know, negotiate a performance guarantee. But if that supply side is not properly controlled, it's very difficult for anyone to agree to a performance guarantee.
Yeah.
Which is again different from a performance test, right?
That's
Performance
right.
test brings a termination right. Performance guarantee, you're talking about a contingent liability, which means it may cost a lot of money to the hotel company. That's where the owner suddenly needs to wear the operator hat and understand, you know, what may happen to them.
Yeah, I mean, I would venture to say that when it comes to a guaranteed owner return over some hurdle, that would have to be a pretty strategic hotel for an operator to agree to, right? They wouldn't do it for any hotel, maybe just for an important hotel in a market they need to get into.
I disagree. Why should you know, there should be any distinction? An owner puts in a lot of money to develop a hotel, and you know, it's operator's job to ensure that he performs in line with the market. Yeah, I mean, if there are disruptions, then everybody understands. And they are inbuilt, you know, the clauses to prevent such incidents.
Okay,
But
I'll throw it back at you now.
Yeah, sure.
When you say perform along with the market,
Yeah.
how does that come back to an owner return?
Well, when you are so probably most informed owners would sort of spend a lot of time understanding, you know, what the operator is projecting in terms of, you know, you just throw in a number, it doesn't make any sense. But if you have a pool of assets, you know where the market is and what the likely scenario for next 5 years is going to be based on the normal operating conditions, then you know you can get a fairly good idea about where the market would hit. So and there's a development time of about 2 years or 2.5 years at the minimum. So it is, if an operator sort of puts in a rate today for 3 year later on when the market is $100 and he's actually projecting $150, you know that it's not going to happen. But if he's saying that, well, the rate is going to be about $120 or $120 or $115, then you know that's likely to happen. But when they actually start to perform, they don't reach 115, they are actually at $90, then there is a problem. And to sort of blame that on market conditions, product, this, that, that's not right. That's my view.
This is when you speak to a very informed owner who has many, many properties. Before he makes an investment, he makes a market study. He knows what he should be getting. And he's looking for the right hotel operator that can deliver that. And he's quite, from what I'm listening to Sanjay, he's very understanding. I want above the market, but not like I just want the market.
I'm
just
very
want the
happy
market.
that you can reach the, you are at the RGI of 1, at least at the minimum reach there.
Right.
But if you are consistently 90,
Below.
85, then there is a serious problem. Then it is better that you hand over the keys and let me get someone else.
The problem
But
is,
I think we're coming back here to a performance test,
Yeah.
right? You're talking RGI or
But again,
RevPAR index.
the performance tests are typically at what, 85, some even suggest up to 70. It is not, you will never be able to pass a test.
Right. But I think where we were going was
I think Manav is looking to,
an owner return. Yes, Manav?
I think, this discussion is great, but I think there are a lot of new ways you can look at it, right? I mean, yes, hotel brands are not supposed to be fortune tellers, but I think there are various ways to carve it out. Why would we not look at, I've negotiated probably close to 100 contracts in the last 20 years. I own hotels. At the end of the day, what we're looking for is my particular hotel doing as well as I think it should be doing, maybe to the competitor set.
Yeah.
Why would I not use STR data and say, I want to be in the top 2 hotels of the 6 hotels that I'm out there, and if you don't get me to the top 2 hotels or top 3 hotels, I'm going to cut back so much of your fees. So I think there are various ways to tie up. I've seen hotels in the last 12 months where they've come back and they've said, if we don't deliver a GOP of 30% or 35%, we will take no incentive fee. So you can link that to the bottom line.
yeah, absolutely.
You can link it to the STR in terms of performance of the top line. So I think there are various ways, and I think that's the only way that you're going to get the operators to start looking at both the top line and the bottom line. I don't think enough of that is being done right now.
Yeah, I completely agree with you, Manav. Thank you very much.
Yeah. But Manav, I think where I was going was the trend to a guaranteed owner return. Again, we've been talking about a performance test here, RevPAR, GOP, what have you. But a guaranteed return based on a developer's pro forma?
There is a hotel in India right now, in Mumbai, and Hilton is one of them, Marriott is the other one, Hyatt is part of it. They're all talking, and they're all talking about giving a minimum guarantee. It's a fixed number that is being put out there, maybe for the first 5 years or 6 years, and then it kind of becomes as part of inflation. So there are opportunities, but you won't get that for every hotel. You'll get that for that marquee asset in the best location in town, and so forth. So just to kind of...
And I have to agree with Manav there. Those are things that, especially when you're looking at the first couple of years, when you're looking at a ramp up where the owner, is going to be pressed with cash, has to meet bank obligations, et cetera. That's a whole different ballgame from year 12, where the owner may or may not have renovated, may or may not have deployed CapEx, maintenance, et cetera. So, and then to open the discussion of, oh, well, I'm not second in the RevPAR test anymore in the comp set. Well, the comp set, we don't agree on the comp set anymore, and I think it becomes very blurry, as the property ages. But I think, in the first couple of years, different locations, different markets, different opportunities, people are open to discuss.
Yeah. And Manav, coming back to your point, I think you're right. If it's a marquee asset in a market that the operator is desirous of getting into, I would say they'd be more open to that discussion. In secondary markets, probably don't want to put their balance sheet at risk.
And Tom, maybe just coming back to the topic of this session, which is, why can't owners, whether it's right or wrong, but get what they want. The thing is, coming back to what Manav said, and we can be very creative. At the end of the day, it really comes down, as you said, to owner's return, NPV for the operator. My point is you can be very creative, very sophisticated, but at the end of the day, it's still about, in this case, the owner, right? It's like, okay, how complex do you want to get? Some owners just give you carte blanche and say, negotiate the best deal. In this case, that's totally fine. Now, if certain owners say, listen, I want to understand what you're negotiating, you know that you're already hitting a bit of a threshold here because it's only that complex you can get into. So all I'm trying to say here is that sometimes you know what the right solution would be, but sometimes you also need to take into account the level of acceptance, understanding of the owner, which sometimes is put out of the equation. But we need to bring in the level of sophistication and education of the owner when it comes to negotiating this performance test or performance guarantees.
Yeah, I would agree, Stephane. I think, certainly you do some of it, some of it I do now, is helping the owner understand what his expectation should be. Now, let's say after we've talked a lot about negotiation, let's get into operation now, and I'll look at Stephane here, and Chris, maybe you can weigh in from your side, and the others from, the operator and owner side, if you will. Once you get into operations, how do you see the role of an asset manager? What should the role be, unlike what we often see in the market today?
Well, the two options here. The first option is the asset manager has been involved as part of the contract negotiation and the pre-opening. So what I'm saying here is the asset manager then is just making sure that everything is going according to plan, and if there are variances, positive or negative, it's his role to basically communicate that in a structured and user-friendly way to the owner, right? This is generally that works well. The second case is the asset manager being hired after the hotel is open, and generally because there's a problem. There, I think it's really about the asset manager coming in, doing a bit of an audit, really understanding what happened, distributing the responsibility. Sometimes, the underperformance may come from the fact that the owner didn't deliver in terms of capex or quality or brand standards, etc. Sometimes it's the operator, but then it's really saying, okay, here's a bit of a balance sheet, right? This is what should have been done by the owner. This is what should have been done by the operator. Let's sit together, let's prioritize, and let's work on it and have a plan for the next 6, 12, 18 months. And then, again, it's the asset manager explaining to the owner, why these things are being done and why they're being done. So, again, it's really two different roles. One is, in the first case, it's really about monitoring and facilitating. The second one is really identifying the opportunities, agreeing on the solutions, and working with the HMC to make sure that the owner fully understands what's going on.
As an operator, the asset manager who's hired by the owner should be one of your closest allied, if you can, and try to get him to understand, because he should be in the best position to understand why the operators are doing what they're doing, what the market condition is, and be able to help explain to the owner the situation in a way that the owner understands and trusts and has that certain trust. As an owner, you should be able to use the asset manager to try to squeeze out as much performance as you can out of the operator, and with the rates and RevPAR and the occupancy and all the other levers that you can push and pull.
I think asset managers, we have fairly hands-on asset management team in our operations. It is a fairly important role. I think equally important as an operator, because a good asset manager can ensure that the property reaches its highest potential, because it's looking at fairly objectively. The problem sometimes is the operators rely on the hotel general managers, especially in large chains. I mean, unlike you are pretty hands-on, so it's a different story, but the likes of Hilton or AKARYN or Marriot or Starwood, there's a hotel general manager who is managing the asset, and you and the head office are getting the report once a month. 30 days are gone, you don't really know what happened. But a hands-on asset manager would be there with the general managers to ensure that the property is being well managed, not only from the financial perspective, but also from the physical attributes, or making best use of spaces. There may be a dead space lying somewhere on the third or fourth floor. Nobody has given it any attention. Maybe you can turn that around to a function space and gain more benefit out of it. It's easy reliance on OTAs these days. So general manager may just basically override the system and get most of the business through very high 27, 28, 30% kind of commissions. The asset manager will look into it and make sure that it's not the case. So, but yeah, you're right. He's the best friend or best resource available to the operator.
Yeah.
Just one element to add to this: if you really want to make it fully functional, you also need to have a team at the property level that can work with an asset manager.
Yes.
So the relationship between the asset manager and the GM is very important. So I think there's also a role for the HMC here to play in terms of either providing support to the GM when dealing with the asset manager, but the thing is, sometimes you can have, as I said, the best ideas, all the solutions, the plan. Execution is critical, right? So if the GM is not on board, nothing is going to happen. And again, you cannot put everything on the GM. That's where corporate and the HMC, as a broader organization, really need to step in, which is not necessarily the case for different reasons. It can be communication, can be relationship, but I think one opportunity for the HMCs is really to work more closely with their GM if and when there's a bit of a hotspot when it comes to a specific property and the asset manager is starting to be a bit more involved, let's put it this way.
The key really is to have the right asset manager on board, because if you have the wrong one that comes in and can be a potential threat or perceived as a potential threat, then nothing ever works anymore. Yeah. So you really, if the owner is going to go down the route of having an asset manager to represent him, care has to be taken to really carefully select someone who really knows what he's doing, well respected by the operator as well. That's really important, because my previous life is an internal auditor. You go into somewhere and try to tell everybody else what to do within 3 months and what else they've done wrong. It's really a disaster if you don't know how to do it right.
Yeah, the asset manager is really not a super general manager, and this is where the problem normally happens. When the asset manager tries to run the operations, then that's a recipe of disaster.
Yeah. I was going to say, you're talking about asset managers. Stephane's going to wave his hand there, and I was going to do the same, so that's not going to get us too far. Okay, we're running out of time. The last thing I thought would be interesting would be to tell your most interesting and hopefully humorous story about possibly an interaction with an owner, an operator, or a negotiation. Who wants to go? Chris.
So this has become a bit of an ongoing story, which I find quite funny. So a few years ago, we decided to modernize our management agreement, and as a result of that, it decreased considerably in size. But obviously, an owner, he needs to hire a lawyer and a consultant and so on, especially a lawyer, to advise him. And the lawyer is obviously not going to cut his fees by half just because the management agreement is cut by half. But one of the things as part of this modernization was to look at things which owners always ask for and which we actually always concede to in introducing some of these things into the management agreement. And there's one in particular which I can't describe, but it's one clause which is purely to the owner's benefit. And lawyers always want to delete it. They always, the first thing they do is strike it out. And then I look at them.
Your lawyer or the owner's
the
lawyer?
owner's lawyers. And I look at them and I explain to them what it actually means. And they say, no, we're striking it out. And then I explain it to the owners, and sometimes the owners get it and say, oh, no, what, So, and I think it's funny because it's a pure owner's clause. And so, beware of the advice you take from your lawyers sometimes.
Yeah, I think the lawyers are normally responsible for, I think, killing the deals in most of the cases. It's not really the principal to principal. I hope there are no lawyers here, but lawyers can be painful.
Is Manav here? Do I have 2 minutes? I'll tell a Thai story. When I was much younger, I was invited by my mentor to attend a lease negotiation here in Thailand, the original Intercon Hotel. And the relationship between Intercon and the lessor had fallen apart. Our leader, who had been close friends with the chairman of the lessor company, General Chalamchai was his name, had fallen badly apart. Anyway, I'm in the meeting, and at one point, I didn't speak because I was just there to learn. And at some point, the general said, "We must have this in the lease." So being a finance guy, I just said, "Excuse me, General, we can't accept this, and these are the reasons." And the old general looked at me and said, "Young man, I'm a military man. I don't understand finance. I just know how to kill people." So I was quiet the rest of the meeting. So as the meeting ended, he came up to me and said, "We're only meeting tomorrow afternoon. Do you have time for lunch? Or to play golf before lunch?" I said, "Yeah, I would love to." He said, "I'll bring you to my club." So he took me out to the club, and he was quite prominent. He had 3 caddies. And if you guys play golf here, it's 3 ladies. So he had one carrying his bag, one with his sun umbrella, and one with his chair. He only gave me 1 caddy, so the pressure's already on. We come to the 18th hole, and by that time we only had 2 minor points left in the negotiation. And I was 25 years old, and I said, "General, why don't we just end this right now? Whoever wins this hole gets what they want. If you beat me, we'll concede. If I beat you, you concede." Now, I wasn't stupid. I could see his level of golf. I also knew I had no authority to do what I was doing. But anyway, he said, "Okay, well, it's your tee. Go ahead." I immediately step up, hook the ball into the lake on the left, and lose the hole. I'm dying because I'm in trouble now. So I go back and I tell my boss, "I screwed up." And he said, "Don't worry, we were going to concede anyway." But the key to me, and this comes back to a lot we were talking about whether it be finance, what have you. In Asia, it's about relationships, right? I think relationships in any agreement with an owner and operator are most important. Commercial is second, probably legal third. In this case, the general was convinced I lost on purpose. So we went back in that afternoon and we split the difference. And until he died, he loved me. I never told him that I wanted to beat him.